Are you having successful results day trading S&P E-mini futures? Most traders who trade by the seat of the pants and follow the market basically lose money. And so why lose money? Well, you're losing money because you don't know how to trade, and you have to admit that to yourself. I trade in using two different methods. One is a short-term method using 6 trade setups, GST, TMC, that I teach in my course: gap, support and resistance, time and price, trend, momentum, and candlesticks. Those are 6 trade setups. There are only 6 trade setups, my friends. And the other trade method that I use is a longer-term trade method. And that's using the Taylor trading technique calculations. And I use the Taylor calculations. I calculate them every evening after the market closes, calculating the new numbers. It's 12 calculations that come down to an average of averages. Very simple. The 2 main numbers are the resistance number up at the top and the support number down at the bottom. I always put the previous day's close on my chart as well, which was right up here yesterday. Now, as a trader, and let me get back to the main point. If you're trading and you're having difficulty trading, I want to suggest to you that you only trade one trade. Become a specialist. And the one trade that you should be trading and become a specialist on is the gap trade. I've said this many times. And the reason that I urge you to do this is because the gap trade is number one. It's the easiest trade to spot. After all, the gap trade is when prices open considerably above or below where they closed the previous day. So on Wednesday, February 15th, here was where they closed the previous day on Tuesday, up at 41.46, and the prices opened down here at 41.21. So there was a potential 25-point gap trade, right? But the market, as we all know, the market doesn't move linearly. It moves in fits and starts, and it tries to shake you out. And that's what happened yesterday. The market opened here, and sure, it would have been nice if it hit the gap right away and make 25 points and goodbye and go play golf for the rest of the day. But the market doesn't work like that. Typically, traders, they trade in the direction the market is going, and the market reverses and they get stopped out, right? This has happened to you 100 times, I'm sure. It's happened to me, of course. It happens to everybody. So you have to prepare to be underwater on a trade. It's almost impossible to hit a trade at the exact bottom of the move. It's almost impossible, or the top of the move if you're trading, if you're trading to the downside. But look at this. The market opened at 41.21 yesterday, and it went up to 41.33, 12 points, and then boom, what happened? This is a 3-minute chart. There are 5 points between each horizontal line. So 5 points, if you're trading E-minis, is $250. It's a lot of money to see evaporate in 5 minutes. In 3 minutes, 3 minutes. This is a 3-minute candle. You see, 3 minutes, boom. These traders here, and plenty of them got shaken out. They got on, they saw the market opened over here, and maybe they knew about the gap trade, maybe they didn't. They saw the market open, and sure, the market moves up. If you can see the range of movement of each candle, it's about 5 to 8 points, right? This candle was, let's see, 5, 10, 15, 20, almost 20 points, this 3-minute move. And it basically hit a low just below where the market opened. So the first thing you have to understand is that if you're going to be trading, you're going to be underwater for a part of your trade. It's just the nature of things. And if you set a stop too tight, you're going to be stopped out. But you know this because it's happened to you so many times before. Nevertheless, if you use the 6 trade setups that I teach in my course at timelessdollar.com, GST TMC, you will be more knowledgeable as to what trade setups, what trade patterns, what price patterns are doing to show you a setup. To traders who don't know what they're doing, every candle looks like a trade, right? I mean, you know this. We all know this. Every candle, you go away from your screen, you come back, oh, there's a trade setup. No, there are only a couple of good trades every week on any given week. There are only a couple of good trades on any given week. And so on any given day, maybe there's 1, maybe 2. But nevertheless, the gap trade is a trade that is easy to spot, and it also closes 70% of the time, 75% of the time. So that gives you pretty good odds right off the bat. But the odds get reversed when you set a tight stop and you get shaken out. And that's what happened over here to many players. And look what happened yesterday. And I talked about the Taylor trading technique. This is a rectangle bounded by the trading support and resistance lines, the Taylor support and resistance calculation lines, that is the average of averages of the previous several days trading. And very often markets obey these Taylor numbers. And that's why they've been used by professional traders for 75 years. Professional traders don't trade without using this, in addition to whatever other tools that they use. I'm not saying not to use other indicators. There are a lot of indicators. I only use one, the stochastics, by the way. But look, when prices did back off, eventually they came down to where? They came down to my calculated support number at 4111. But where was the place to get on? Well, if you got on over here and you held on to here and you didn't get stopped out, you said, and to me, I look at the big picture also. Yesterday, the big picture, some reports came out, economic reports, that indicated that the economy was still chugging along in a pretty good clip. So, in my estimation, the big picture showed the economy was moving forward, despite the fact that inflation is still a problem, and the gap trade existed. And the gap trade, as I said, it closes 70-75% of the time. So be a specialist, trade the gap trade. But if you're doing that, you have to have some confidence as to where to set the stop. Me, I set the stop below my Taylor trading zone. Big stop, right? Listen, if you want to trade using a trade 1, 2, 3 points, you're going to get. It basically doesn't work for most people, unless you can hit the move right at the exact top or bottom. So, check out the Taylor trading technique. Trade it with a simulated account. Trade it with a micro E-minis, $5. You can't get hurt so much with $5 trades. Okay, market goes against you 4 or 5 points, it's $20, $25. It's not going to kill you. But if you know that the market is going to move up and close the gap, close the gap. I was done by 12 o'clock. Before 12 o'clock, the market closed the gap. Or sometimes even if it approaches the gap and it shows that it's hesitating, you see this over here, it's moving, and just the last couple of points. Get out before then and be happy that you made a profit. So that is a tip that I'm going to give you. Become a specialist, learn the gap trade, and then if you want to learn the other 5 trades, take my course at timelessdollar.com. Don't be shy. I also offer a number of other free resources. Now, where's the market going to go today? Well, today here I'm going to go to the overnight session, and boom, this is what happened. I'm going to show you my trading zone for today, folks. The overnight session was coming in right at the previous day's close, right at Wednesday's close, right? Okay. And then at 8:30, economic reports came out indicating that the producer price index, producer prices were still going up. All right, the market reacted, knee-jerk reaction, big move down. So the market now, it made its move down, and the guys who were holding on to positions over here, now the gap is up at 41.57. Will it close the gap today? Well, there are 2 targets that you have to look for. There are others, but I'm going to give you the 2 main ones. There's the trading zone support line. Now, remember, support becomes resistance. The market, if it comes up to here, I will bet $1 to a donut. It's going to hesitate. I think it'll break through, but I think it'll hesitate. It'll hesitate here. So if you're going to trade here, and you're going to, let's see, it's 41.07, and the support is 41.23. So you have a 16-point range over here from where we're trading now to the Taylor support number at 41.23. 16 points. That's a pretty good trade. And look, we're in an area of stabilization here. Is it consolidation? Is it distribution? Well, take your pick. I think that the prices are going up. This is a knee-jerk reaction. Markets generally recover from a knee-jerk reaction. And good chance that we are going to approach the previous day's close and close the gap today, which would be a wonderful trade, would it not? Would it not? So take my advice. If you want to be smart, go to my site at timelessdollar.com. subscribe to a trial of the Taylor Trading Report. I send these reports out daily with the Taylor numbers and a daily commentary. It's not expensive, and it'll give you a lot more insight into where the market is likely to go and where it's going to trade the next trading session. So that's my video for today. Thanks so much for watching. This is Marv Eisen from Timeless Dollar Trading Academy. It's Thursday, February 16th. Have a great day. Trade with lots of patience, and I'll see you in my next video.